So options, we touched on it very briefly, but you had talked about it a little bit about converting a primary residence into a rental. If you want to talk a little
Correct.
bit more about that, John.
I will. Normally, if a veteran has rental properties, we cannot count any rental income unless he's been a landlord for 2 years and he's got 2 years worth of tax returns showing the rental property on it, except his departing residence. You have a veteran that wants to buy another house using his VA again on partial entitlement. He can take 75% of the rents on his place that he's renting out and offset his payment with it. We can't give him any income credit, but we can give him the offset. And if he does have rental properties, 3 months principal, interest, taxes, insurance, required as reserves for each property if he's eligible for the rental income. If we hit him with the entire payment and not give him credit for the rental income, then he doesn't have to have any reserves. So that's basically it. The VA loan program is for owner-occupied primary residence only. I don't think we touched on one thing we discussed earlier, Maria, about the VA program. Those of you that list with home flippers, VA has no flip rules. You do not have to have held that property for 90 days. You do not have to give an extensive list of what improvements you made in the house. All you need is a bona fide VA appraisal. So if you sell to a veteran, all they do is get an appraisal. VA does not underwrite the seller. They don't care. They care that the buyer is getting a bona fide value for what he's purchased, and they do that through their appraisal. So it's really simple. And like FHA has what's called an arm's length transaction. So if I want to buy a home from my brother, I can't get the full FHA loan unless I have rented that home from him for 6 months. Because of the arm's length transaction rule, I have to put 15% down. With VA, there's no arm's length transaction rules. I could go buy that home from my brother and just get an appraisal and move right in. So the VA, like I said, they try and make it easy on the veteran and support the veteran in home ownership.
Right. I love that this is an option, and I like to try and stress this, as far as being able to convert a property to a rental. Just in my experience of working with buyers and sellers, having, people in the military, if they're still active duty, having moves, PCS moves, more frequently. And,
Exactly.
it might be, I have a friend, they owned a home, just outside of Harrisburg, and had a PCS move. They knew it was only going to be for a year out into the Kansas area, but they wanted to come back, and they didn't want to give up their home. They loved it, and so they wanted to keep it, but wanted to have the ability of renting it out for a year and going out in the area, or whether it's 2 years. It's nice to be able to keep that property if you want to, not to have to sell it in order to purchase another one. Or just the starting out, it's a great way to become an investor, I think. It's an awesome loan to get into your first house, buy something small, maybe a townhouse, knowing that you're only going to be in an area for a year or two, and then, rent it out, move on and still be able to purchase something else at your new location. So
Yeah, as loan limits keep rising, you get that ability to do that.
Yeah.
Eligibility loan. Yeah.
Yeah.
Absolutely.
Yeah. So this is great. And I think some people are under the misconception of, that they aren't able to do that, in order to purchase another home, they have to sell the first one, pay off the mortgage in order to use it again. But, want to stress that, being able to use it multiple times on multiple properties.
Yep.
Yeah.
There's one guy in Northern California that has 5 active VA loans. And
Yeah.
their rates started going up. At one point, they were $1,050,000 no down.
Wow.
So when he started buying, they were $240,000 no down. And every time they go up, he'd move to a different community and take advantage of the higher loan limits. And he's got 5 active VA loans. He's my hero.
Yeah, that's awesome. That's
Very
great.
smart guy.
Yeah,
He's in the mortgage business too, so he understands entitlement and how to do it.
good. IRRRLs?
Yep, 3
Almost
R's.
forgot that last R in there. Andy, do you want to take that one for us?
Sure. So the 3 R's stand for rate reduction refinance loan. We're actually doing quite a few of these right now. This is, you know, the entire VA product itself, I believe, is fairly misunderstood. But this loan in particular, I don't think a lot of veterans even know about. But it's actually pretty simple, and John had talked about it a little bit ago. If you've got an existing VA loan, and if the conditions exist, you can refinance your mortgage, include all of the costs that are associated with that loan, including 2 discount points, which will allow you to lower the interest rate even more without any obligation to you out of pocket. There's no appraisal. There's no pay stubs. They're going to do a quick check of your credit. We're just going to make sure that everything looks okay. But it basically allows you to reset the monthly payment on your mortgage at the lower interest rates without having to go through the entire process of refinancing like you would with an FHA loan or a conventional loan.
And no termite inspection.
Correct. Correct. Yeah, so it's a fairly useful tool. I just got off the phone with the guy yesterday morning who was able to include the 2 max discount points, lower his interest rate to 2.75%, include all the fees in the loan, and knock $250 a month off of his mortgage payment. We're going to close him the beginning of July. He's going to miss 2 mortgage payments and get an escrow refund. So till this whole thing's said and done, his mortgage payment's going to go down $250 a month. He's going to pocket 2 months of his mortgage payment, which right now I think is around $2,100. And he's going to get an escrow refund of maybe $3,000. So till it's all said and done, he'll have $7,000 in the bank and a mortgage payment that's $250 less.
That's amazing.
In 2 months with no payments.
Yep.
Wow.
Yeah. And it's so easy. It is, I mean, it's so simple that usually when the guy does his first IRRRL, he says, that's it. That's all we had to do. There's nothing to it. And the only reason we run a credit report is to get a FICO score. We don't count any liabilities or anything against them. We just want to make sure that they meet the investor's requirement, because it's not a VA requirement. VA doesn't require any credit run at all. But to get pricing, our investors require a FICO score.
Great.